Holy fucking shit.
Nvidia stock ticker symbol NVDA reported earnings year after the close, and the stock is down 3.14%. The market just having a bit of a sour reaction. However, the stock is up about 100% since the April tariff lows, and we're going to talk about Nvidia. Why this earnings report is very important. What does it mean for the AI trade and the hyperscalers, and what does it mean for the S&P 500, guys? But before we dive in, if you could please go ahead, like and subscribe. It really helps me out. Now, for those of you that don't know what Nvidia does, you probably shouldn't be investing in equities. You should know what Nvidia does. They design and manufacture high-performance GPUs and related technologies for gaming, AI, data centers, and professional visualization. Now, the quarter was fantastic. Absolutely no surprise right there. Revenue growing 54%, beating the analyst expectations. Earnings per share growing 61%, beating the analyst expectations of 98 cents with $1.04 in change. Now, our gross margins actually fell here for the quarter ever so slightly from 75.1 to 72.4, and that has to do with that Blackwell Ultra ramp. Whenever they're ramping the new GPUs, gross margins tend to fall. However, net income margins increased, so operating leverage still being built in. That's a pretty big increase, 170 basis points, and you could see it in the net income. 26.4 billion grew from 24.8 billion. Free cash flow margins fell significantly from 44.9 to 28.8%. However, due to the massive revenue increases, free cash flow roughly stayed the same. So that is absolutely crazy. So you're going to see a massive boost to free cash flow in the coming quarters once free cash flow margin normalizes and then the company's balance sheet. Now, the reason why free cash flow fell had to do with taxes being paid in this quarter of $8.1 billion. So that is why that is what drove the sequential decrease. And then the company's balance sheet, stellar, absolutely stellar, about $10 billion in debt, $56 billion in cash, absolutely incredible news. And the icing on top of the cake for this quarter was that the management team came out and authorized another $60 billion in share buybacks. Now, diving into the financials in a more granular fashion, revenue was up 55%, absolutely crazy, from $30 billion last year, $46 billion this year. Cost of revenue was substantially higher. That grew 72%, and that is why gross margins fell. And again, it has to do with that Blackwell Ultra ramping up. However, the company managed their costs in operating expenses really well, particularly the SG&A costs. That only grew 37%. And that is why we actually did see net income was up 59%. And with, the float earnings per share being decreased, that is why we actually saw a 61% increase in earnings per share. Now, looking at the segmentation here for Nvidia, you can see data center makes up the majority of their revenue, and that grew 56% on a year-over-year basis, 33 billion from compute, 7.2 billion from networking. Gaming makes up 4.2 billion, so still a hefty size in the gaming segment right here, and that grew 49% on a year-over-year basis. You can see professional visualization, very small segment, but could get bigger, grew 32%. Automotive grew 69%, and OEM and other grew 97%. But these are largely very small segments. However, they definitely can grow. And you can see ultimately what really drives growth is this data center segment. And to a degree, the gaming segment. This is still, 10 to 11% of total revenue for Nvidia, and that is substantial. However, there is a red flag in these earnings right here. Now, data center revenue, the consensus estimates was for 41.2 billion. Nvidia pretty much came out and reported 41.1, so they actually missed their revenue expectation. In fact, if you look at the compute from the previous quarter to this quarter, it actually declined sequentially. Now, still a year-over-year increase, but a sequential decline. And the reason why we actually didn't see quarter two data center revenue decline was simply because the networking grew 98% here on the quarter. So networking really held the data center segment together. And I think this was probably the big reason why the stock was actually down after what was, to be honest, an incredible earnings report. It had to do with the fact that, we are starting to see certain cracks in the AI trade, So to actually see the compute segment, which is ultimately just data center GPUs, decline on a sequential basis, really throws a bit of water on the AI trade, but nothing crazy. And I do think the market will probably look forward to this because the guide was pretty good. We'll talk about that a little bit later on. Looking at Nvidia's growth overall, we could see that growth has moderated a lot, and that's because they're coming up over incredibly tough comps, but the company is still expected to grow at about the 50% region for the next 2 quarters, as you can see here, for the next 3 quarters, but growth definitely moderating, as you know, the company is doing 150, 200, 250 billion dollars in revenue every single year. Sometimes the law of large numbers catches up to everything. Now, this was something I found very interesting in that 10Q. I'm going to go ahead and read this for you guys right here. For the second quarter in fiscal year 2026, sales to one direct customer, customer A, represented 23% of total revenue, and sales to a second direct customer, customer B, represented 16% of total revenue. So together, these 2 customers represented 50% of total data center revenue, and you could see here, both of which were attributed to the compute and networking segment. So these 2 customers was likely Microsoft, Amazon, and or Meta. One of those 3 or 2 of those 3 clients represented 50% of Nvidia sales. So there's definitely concentration risk in these names. However, in their other customers, you could see it's fairly spread out. But, you know, this is mostly still a hyperscaler story. You know, the 10 biggest companies in America are really just fueling Nvidia's growth, especially in the data center, compute, and networking segments. Now, looking at the guide ahead, the guide was absolutely crazy. The market was expecting $47 billion in revenue. The management team said we're looking to do $54 billion. So that would represent 16% growth for the quarter and 46% growth for the full year on a year-over-year basis. And this was absolutely a double beat and a massive raise. And the fact that the stock was down 3% really goes to show how much of this was priced in. And I think if we didn't get this massive raise in guidance, I think the stock would have been down like 10 or 15%. Just purely on valuation concerns, moderating growth, and that sequential decline in the compute segment. But this doesn't also include any China guidance, so they could actually definitely be upside to this number right here. And we do know that Nvidia officially have the green light to go ahead and sell into China. Now, looking at the earnings call, there was a couple of things I want to mention. Jensen Huang said Nvidia's Rubin AI computing platform, that's their next chip after Blackwell Ultra, the successor to the Blackwell line, as you can see, it remains on schedule for volume production next year. Rubin represents a 900-fold increase in computing power over its Hopper architecture. Hopper was what came before Blackwell. And though Nvidia didn't count China sales in its fiscal third quarter outlook, Jensen Huang said during the company's earnings call that he estimates the China market could represent a $50 billion opportunity for Nvidia, which is growing at a 50% year-over-year clip. So, and Jensen Huang definitely wants to enter China. Right now, China is about an $8 billion market for Nvidia. So to see this, right, means there could definitely be massive upside for Nvidia. So all in all, this was a great quarter. Cracks starting to show, but I think the market will look past it and the stock will move high. And ultimately, the thesis right now for Nvidia is that the hyperscalers, Meta, Microsoft, Amazon, Alphabet, will continue to scale up their CapEx. This is the forecast into 2030, and that continued scale up in CapEx will continue to go to and be accretive to Nvidia, and you will constantly see Nvidia growing its top line and by extension, you know, its bottom line, and continue to be one of the biggest companies in the world. Now, the stock, you know what? It's not necessarily cheap, but not expensive either on a relative basis. Look at this price to earnings ratio of 33 times. The median is 34. And at one point, you could have bought the stock 20 times earnings below the market multiple. It has a shareholder yield of 1.28% and trades at an EV to EBITDA at 26.3 times. That's not crazy for a company growing or expected to grow at a 50% clip, with 56% net margins, 50% free cash flow margins, and 73% gross margins. Not crazy at all to see a 33 multiple for Nvidia. So let's use that, right? Not a 33 multiple, but a 30 multiple to determine Nvidia's fair value. So if we plug in the trailing 12-month revenue, and that's going to grow sequentially at 20% through 2029, right? So you're looking at about $400 billion in revenue in 2029, using 55% net margins. Current net margins are about 58%, so it's looking at a bit of a decline. We're looking at about net income of $222 billion, which is absolutely insane. That's an insane number. That's absolutely crazy. So if we apply a 30 PE multiple, current multiple on a trading basis is 45, on a forward basis 33. We're going to use 30. I don't think that's a crazy multiple in my opinion. You get the enterprise value, subtract the net debt, then you get the equity value and divide by shares outstanding, looking to decline by about 0.5 percentage point every single year with that $60 billion share buyback authorization. You're looking at a stock price in 2029 of $282. The current price is $181, maybe a little bit lower after the earnings call. And that's about growth of about 9.2%. With a dividend yield of 0.03%. So is Nvidia a buy right now? I would say yes. I mean, look, it might come in at the performance of the S&P 500, and there may even be upside to these numbers with China. You can actually see margins potentially expand to 58%. I have sandbagged margins right here. Is Nvidia a buy? I think, yeah, I think it should be a cornerstone of your portfolio. But if you really want like diversified exposure to Nvidia, just buy ticker symbol QQQ, a NASDAQ 100 ETF or any tech ETF. You'll get anywhere from an 8 to 15% exposure to Nvidia. And then you can ride this one to the upside or the downside. I do think we are probably going to see a little bit of weakness. You can see on the weekly chart, we are forming what we call an island top. And I do think you buy Nvidia right here at this volume shelf, also where we previously used it as resistance multiple times. This area right here is the $156 region. So if we do get a pullback after these earnings to this level right here, go ahead, buy that dip because I do think we are going higher. I think we see $200 before the end of the year for Nvidia. So if we do get a dip to the $150 area, that would be a great place to go ahead and buy. You'll maybe eke out about 12% compounded annual gains over the next 5 years if that is the case. And this dip right here is starting to look like a generational low that we saw in April at $88. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.